Hello everyone. So welcome back to my YouTube channel Options Behavior. Today we are gonna discuss one of my favorite strategy, and that is kind of monthly income strategy. Okay, so that is one of the best option strategy that I'm going to discuss right now. So this is going to be a very useful and very fruitful videos, guys, for you. Okay, so uh, and just try to understand the logic behind this, and all the concept behind this. So it is, life would be so easier, if you adapt this strategy for for trading in options, especially in stock options. Okay, because this is more profitable than than indices. So uh, let's not waste time, and let us start the hot topic of the day. Okay, so today we would be seeing, okay, if you are bullish on any stock, right? If you want to buy a call option, okay, so how to hedge that option, and what is the maximum risk and what is the maximum reward, and how can this be profitable strategies. So this is gonna be very useful for you guys, and uh, I would say, this would be really fruitful, because you're going to make certain monthly income as part of this. Okay, so okay, so for example, let me start with by selecting any of the stocks. For example, I'm gonna select Infosys. Okay, because I was bullish on Infosys for this month of November. Okay, it's not like since it has risen in just few days, but I would just show you, the moment I made this strategy, and even I had deployed my capital on this strategy, and it was really helpful, and it was awesome return actually. Okay, so anyway, this could be, maybe if you're having bullish view in any other stock, then you can apply those concept also. So this is going to be very useful, and I guarantee that you will surely earn from this strategy. Okay, and every month this can be made on any stocks, and even you can make on multiple stocks. So obviously some will be, even in worst case scenarios, if uh, some stocks are giving losses, okay, that will be very minor losses. And if you make this strategy, in multiple stocks, say suppose three or four stocks, then obviously you will always be in profit. That I can guarantee. So okay, let's not waste our time. So what is the concept, and what is the precondition and prerequisite, okay, behind making this strategy is, first of all, you will have to make sure that whether you are bullish on any stock, or you are bearish on any stock. Obviously, the options for this stock should be obviously liquid, okay, um, because we are buying a certain option and we are going to sell some options. So obviously, if the option is not liquid, right, so you will not be able to make the strategy. So make sure that whatever the stock that you select, it should, there should be liquidity in that option. I mean, in that stock. Okay. So, for example, and so what is the condition is, first of all, yeah, it has to start on the very first day of the monthly expiry. Okay, it has to start. We have to make this strategy on the very first day of monthly expiry. Okay, by 11 o'clock or 10:30. Okay, in the morning you can make it, because that point of time normally market behaves, in a stable way. So this will be easy for you, to easily place the orders. So the first condition is, it has to be made on the very first day of monthly expiry, and we have to select such a stock, okay, which are having liquid options. And thirdly is, you should make a view on that stock. Okay, even your view goes wrong, right? So we are gonna see like what is the impact if your views if your goes wrong, okay, or maybe if your stock doesn't move, even if you're bullish, but if it doesn't move that much that you were expecting, but still you will be profitable. So all the scenarios we are gonna cover as part of this strategy, okay? So for example, if you would see, okay, this option, uh, so I had made a bullish view on Infosys, okay. So that time it was trading around 1700. Okay, so let me show you that also, because why should I talk in air? So okay, if I select Infosys, okay, and if I take you to the very first day of this month, okay, maybe I'm just checking hourly chart to make you understand easily. So, acha, so first of all, the very first day of this month, okay, that is 1st of November, okay, that is on Monday. Although we have started this on I mean, the expiry, I mean, the November month's expiry, right? So although it would have started on 29th, so you could have made this strategy on 20 and 29th of October, or even 1st November is fine. So let us check this on 1st of November, okay? So let me show you what was the price, or even if you, okay, let's go to 1st of November. So okay. First of okay, so this is October, and this is October, and November is gonna start from here, 29th 1. Okay, so okay, let me open the hourly chart. Open the hourly chart, and 1st of November would be around, okay, 1st of November, right? After 1 hour, say suppose at 10:15, right? At 10:15, the price closed around, as you can see, 1693. So let us consider this to be a 1700, just we will, so what we are going to do is we will buy the ATM price, okay, that is the nearest strike price of the spot price, okay. So for example, now it is trading at 1693. So we can either make, we can buy the call at 1619 or 1700. So let's make it, round figure, and let's buy a call of 1700 strike. Okay. Acha. Okay. So now what you have to do is, so if I would have selected the 1700 call, okay. So that moment of time, 1700 call, 1700 call would have been trading at around, mm, 10:15, right? So yeah, 1700. Shit, what the hell I have selected? 1700 in call was trading around. Okay, yeah, 10:15 as you can see. So 10:15 of 11th. Anyway, so it was trading around 47 rupees. Okay, so 1700 call was trading around 17. Call was trading around 47 rupees. Right? November call here, right? 47 or 48, whatever it is. So let us assume this to be a 48. Okay. And so what we are going to do is we would be selecting a call at 47 rupees. Suppose we have buy, let's consider this, like we have bought this strike option at the rate of at the price of 47.5. So we have added this call. Okay. Now, so what would be the hedging? Okay. So we would be, so since here we are acting as a buyer. Okay, since we are bullish and we are buying a call, but there is a risk of losing all the premiums that we have paid, that is 47 rupees, right? So that can put me in loss. So in order to avoid that losses, or maybe in order to minimize that losses to a very great extent, okay, I should be selling some strikes, okay, further strikes. So that is what I would do is I would be selecting. Okay, so from here, this is showing as per the current strike rate. Okay, so that point of time, uh, I had selected at around 1800 strike. Okay, 1800, 1800. So which was of 20 delta. So what we have to do is we have to select a strike which is trading around 20 delta. Okay, and the delta should be 20. So what we are gonna do is, okay, what we are gonna do is, so let me show you the price at that moment of time. So 1st of November is 10, right? So it was trading around 17 rupees, trading around 17 rupees. Okay, so now what we are gonna do is we would be selling this strike. We would be selling this strike at 17 point. Let's make it 17 only. So how many lots? Make sure that the selling strike. Okay, first of all, the criteria has to be we have to buy a call, okay, of ATM, okay, at the money strike, and we have to sell two calls of 20 delta. So this 1800, that point of time it was trading around 20 or 20.5 like that. Okay, so I had selected this strike and I have sold two lots of it at the price of 17. Okay, so the moment I made this one, right, so uh, unfortunately Nifty started falling down. Maybe for certain period of for certain days it was down. It was in downtrend, as you can see. Okay, as you can see, even in fee, since all the stocks were falling, right? So if I show you that one, okay, so here we have taken this to be at 1693. It went 1717, then came down, then again up, then again down, then again here 7050, then again came back, right, at 1700 again. So the prices keep on fluctuating, but finally, since our view was bullish, so finally it went up. Okay, so the moment it went up and it came down. Okay, so if you know the options behavior and its mathematical condition. Okay, so even in that worst case also, that the stock is not moving at all, it is gonna keep you in profit. It is gonna keep you in profit. Okay, so why? The reason is, okay, since you are bullish, but if stocks starts falling down, okay, so instead of losing this 47 rupees premium, okay, you are just gonna lose maybe 10 rupees or 12 rupees. Okay, and the infill lot size is just 300, right? So you're gonna hardly lose 36, 3500. That too in worst case, that even that loss will I mean, you will realize that losses, in case if it really falls drastically. Okay, but like if it just falls, say suppose 10 point 20 points, then it again tries to rise up and goes it tries to go up. So what happens is, you finally the option we have, since we have bought the ATM strike, right? So that will not lose. I mean, that will regain its premium, okay, very faster than the one that we have sold. Okay, so in that case, what will happen is, even if your bought action option, okay, will be in loss, but the option that you have sold, that is two lots, right? So that will keep you in profit, although the profit will be minor. And even we are, even we are in the red zone area, okay, where we can make losses, still you will making some profit, whether it could be 1,000 rupees, whether it could be 500 or 800, but it will keep you in profit if you know the options behavior, and you can easily understand this. But the moment stock starts moving in your direction, see, after so many days it actually moved up. Okay, so what happens is, okay, normally if we buy naked option, right, and the stock doesn't move, or maybe it remains at the same price, so the premium, especially the ATM premium, right, it starts losing its value and its prices, right, and people simply get afraid of it, and they simply cut their positions into losses. So finally they are in loss, but ultimately the stock moves. So the person thinks, oh my God, what would if I would have if I would have, held this position for more period of time, so I would be in profit. But no, the biggest enemy of option world is, emotion that will take it away. Okay, so you and that will make you think, that will make you decide that, okay, let's cut the losses. What if it goes zero, right? So you will not be able to take that much risk. But normally stock moves, okay, because your direction was correct. Even market was overall bullish. Monthly it was bullish, weekly it was bullish. So it has to move. It has to move further at least. So the moment it started up moving, it, it is gonna give you very big profit. Okay, means in terms of percentage, it's really a big profit. So see, the moment it starts moving up, even this might be in minor loss, right? Like 900, but this is giving a very good profit. And even there is no emotion in this. Okay, and downside there is almost no risk. Even this can be minimized if we have the option scale. Okay, this can be also made zero or very minor loss. That is almost negligible. Okay, yes. Where is the risk? See, the moment you have made, maybe it was trading around 1900 from here till here, means the stock has to move. Okay, and the stock has to move around. Okay, so from here, if I consider this to be here, right, 100 points. So 100 points means, okay, 100 points means almost uh, 15%, guys. Okay, so the stock has to move drastically upside, that is 15%. So Infi, stocks like Infi, right, such a heavy weightage in Nifty, it cannot move 15% in a single day. I'm not saying this is not possible, but that is I mean, that is the chances of having this movement in a single day is very, very rare. Okay, is very, very rare, and still, if that moves in that way in drastically, right? So even and there is a solution for that. Okay, there is a solution for that, and we can make certain adjustment also. Okay, so maybe we can make bullish spread again at that point of time. Okay, or maybe we can uh, 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 by making bullish spread we can also sell the further P. Okay, further strike of P, right? So there could be many ways that you can save your position, you can make your positions in profit. So that depends on your skill and your knowledge on option. But at least that scenario is very rare. So if I do not consider that, and the moment it starts rising up slowly, maybe 3% in a day, 5% in a day, okay, and then it falls, then again rises, then it falls in again rises. Normally, stocks or maybe indices, right, moves in a zigzag way. So this is a real, actually, this is a real, opportunity to make money in option because if that thing happens, right, so as you can see now 1700, now it is trading at 1780 rupees, right? So already the bought option has come, has become ITM, right? But still your sold option is OTM, right? So and even uh, ITM will not lose its premium, right, if the stock keeps on moving slowly, but OTM will definitely. So in such a strategy, in such a you know option hedging, you are gonna always make some amount of money, even in worst case. Okay, upper side anyway you are safe at least 15% or 20%. Okay, after 50% only you are gonna make losses. There is a chance, but that is a huge movement. So the chances of making money in this strategy is very very high. Okay, although they will not show you. I mean, the Opsta will not show you that much of percentage of probability of profit. Okay, but if you know the options calculations and its behavior, it's gonna definitely put you in profit. So, guys, this is a very useful and a very fruitful strategies that can give you a certain monthly income. Okay, see, now still you do not have to do any adjustment at all, and the underlying has already moved to your direction, right? And your sold option, it has still that capacity of losing all its premium if the stock that is in fee doesn't move, or maybe even if it moves 20 points further, and if it expires at 1800, then at that point of time you're gonna make the maximum profit of it, which is 25,000. Although still you are in 13 to 14% profit, right? That is also a very good amount of money. You can book the profit because your losses was around 3,000 or like that, right? Max loss is 3,400. So at least you are making 1 is to 3 profit. That is a very good profit. You can simply book it. But you are seeing like, okay, still we have time, and still I did not reach at the level of 1800. So I mean, you can simply wear this at this point of time, guys. There is no harm. There is nothing to fear about. You can still, even if the stock moves up, right? You're gonna make more profit. Okay. In fact, I made this strategy on maybe 2 days back before the expiry. So I have bought this at 54 rupees. Okay, I bought this 54 rupees and I've sold this one as 22 rupees. Okay, although I have booked my profit because I was having some other option also, so I needed some capital to manage my other strategies. So that's the reason I booked it at around 15%. So that is quite a good percentage return. As you can see, you are booking around 11,000. That too in a strategy where there is no fear, there is no emotion, there is nothing that can put you in, you know, emotionally unstable. There is nothing like that and that can make you in big losses, right? So you can simply make money just by staying in the market, let the market moves on, whether it falls, whether it rises, and if required, then we will do adjustment. So adjustment is nothing here, but if it if it trades in this zone for a certain period of time and your indicators indicate that, okay, this is not, I mean, there is no potential in moving upside for this stock, so what you can do is, you can sell one more lot of this strike, or maybe further strike, maybe 18,014, 1840 for 40 rupees strike you can sell. So you can just minimize your losses to a to a such amount, that can be simply ignored, like 1000 or 1200 and maybe 800. That depends on your skill, and right. So maybe you can, if you would have sold this strike like 1900 strike, obviously your losses could be almost negligible. So downside, you're almost safe, and there is a very big range, okay, in upper side. So before going to that red zone, that is the upper side red zone. So before putting you in loss, this is gonna make you first of all a very good profit. This is gonna give you very good profit. Okay. So why shouldn't we, like adapt this strategy? There is like people think, oh, there is a very risk in trading in options, especially in selling stocks option. It's a huge risk. What if the stock moves 8% or 10% in opposite direction of my position? What will happen? Yeah, nothing is going to happen. Right? In worst case, I will be losing. Even if I do not make any adjustment in downside, I would be hardly losing 3500. That is still can be managed, guys. I'm saying 3500 is not the maximum loss that you're going to make. Okay, 3500 is the worst case loss. If you do not do anything at all and let the options expire without doing any adjustment. Okay, but if you have some capital, you can simply sell some strikes. Okay, actually I did this in Reliance. So I made this strategy, as I told you earlier, right? That if you make this strategy in multiple stocks, you are gonna surely make profit. So I made, in two stocks. One was Reliance and another was Infi. So in Infosys, I booked around this 11,000, and in Reliance, it did not rise the moment I made a strategy. It kept falling down. Okay, so there was maximum loss of around 2700 or 2800. So what I have realized is, okay, the means the stock has finally turned into bearish. So what I did was I sold one more call option. So finally I exited at cost, guys. I'm saying even in worst case. Okay, although means if I would have not done any adjustment, it would have hardly given me losses of 2700 or 2800, like that. That too in worst case. But I had the capital. I simply sold one more call, and finally I knew that this is not gonna make that much of movement again. 20%, that was obviously not feasible in such a low VIX market. So I thought of selling this out. So finally, what happened? I made positions in two stocks. One gave me no profit, no loss, and one gave me very good profit. So right, so it can be easily, I mean, you can easily earn money in stock options. Normally, people think that this is very difficult in trading options, especially in stock options, but there's nothing like that. And if your view is bearish, you can simply make the opposite one, that you can buy the ATM put, and you can sell OTM puts of 20 delta, two lots. That's it. Okay, guys. So I'm sure that you guys will deploy this strategy, and I'm sure that you're gonna make a profit in stock market in terms of option trading. And if you really like my strategies and videos, please do like, subscribe, and share with your friends, family, and circle. Okay, so that they can also start earning something from stock market. Normally people think that, okay, it is not easy from the stock market to earn, but really if you have some knowledge and option and all, you can simply make money, guys. So thanks a lot for watching. Thank you so much. I would be publishing more videos on such strategies. Keep supporting me. Thank you.